Well, thanks so much for tuning into the market wrap, and it turned out to be a rather uneasy pre-expiry session, much contrary to what at least I had anticipated as well, because I didn't expect the sudden break of momentum, even at the broader end of the spectrum. And I think there were telltale signs, even if the large caps corrected only in the second half of trade, that the broader markets were giving today. That there was a bit of pressure, and that probably showed more so in the second half. And mind you, this is despite the fact that Europe was not showing too many gashes, and the US futures were in the green as well. So I think we had ourselves to blame. Some defensives, particularly in pharma, were okay. So as you can see, Divi's and Sun didn't fall as much, and Rod Reddy's didn't fall as much, and IT and HCL didn't fall as much, and Cipla and Asian Paints were the only gainers. The losers, big number of losers. Now, the pertinent point is, I think there is some bit of belief that maybe the global recovery could be faltering, and then as a result of which you will have oil, base commodities, all of which were red hot in the last few months, starting to come off. Remember, these are stocks which are not really trading at the nadir. They're trading at, if not peaks, near peaks, and that's why the room to fall may be higher than the room to grow in the case of a good event versus a bad event. So slight disturbances, and I think that's leading to the kind of cuts that we saw. Now, Adani Ports may have had special gashes. I doubt that it's fallen so much because of also, I mean, one of the reasons could also be that the global trade might be a bit lower, not in least due to the Suez Canal disruption, but due to the belief that the EXIM trade may get impacted because of the lockdowns, increased lockdowns. So you see that, right? That pattern, that commodities, trade-related things, banks, all of these came off in the session, and it's not looking a very pretty picture. And mind you, the fact, like I said, despite the US markets doing okay, if we've done this today, it may not necessarily lead to a very good expiry, though, because the US markets are in the green. You might hope for some relief tomorrow. But Nicky Johnson, and Nicky, it's a wide bouquet from where you can choose from on the key standout movers in the session, because a lot of these fell. Or are you speaking about the one or two stocks that gained?
Afternoon, Niraj. Actually, I picked up a stock which was doing well in trade until the last hour of the trade. Of course, the stock, like most of the others, you witnessed some amount of selling pressure by the close of the trade also because of F&O expiry. JSW Steel is clearly the pick that I have today, because there was a report which was from Morgan Stanley on JSW Steel, where they had upgraded the counter to overweight and said that this counter, at this point in time, the steel is doing well. The cycle is, in fact, there is a strong rebound in demand. There is supply side reforms in China. All of them are leading to higher international prices. And at this point of time, it's a super cycle profitability, which can be sustained for a longer period of time, is the view that Morgan Stanley has overall for the industry. Typically, when you talk about JSW Steel, it feels that accelerated deleveraging and the potential start of new capex cycle is expected to drive further growth coming in for JSW Steel. Of course, they've spoken about their valuations, which are at premium. They are expected to sustain given the kind of better ROE profile. At simultaneously, it downgraded SAIL on the other hand, surprisingly, because SAIL is, it's surprising because SAIL has been doing well. In fact, it was turned out to be the black horse typically from this industry, but more so less right now Morgan Stanley has a different view as compared to what the other peers have. But JSW Steel clearly is still topping their list. I'll sit back to you, Niraj, and ask you about a trend.
Well, yeah, if you're asking about trends today, well, very few, you would have to admit. The larger trend was down. And I think if you look at the broader end of the spectrum, like I said, from the midway through the trading day, you could have seen that there was some pressure points at the broader end of the spectrum. Stocks were not able to quite sustain any kind of momentum if they had one in the first place. And you could see that. Like, look at the number of stocks that came off and how they came off. And look at the stocks, quality stocks, which are now significantly lower from their highs. So some very strong Dixon Technologies, right? Look at that number 12 on the loser side, down 5% at 3676. The stock went up to as high as 4250. From there, has come off quite rapidly post the split, right? The Astral Poly, blue chip as they come, from 1750 to 1575. Significant gashes there. Some financial names today: Dhani, India Bulls, IDFC, all of them correcting. Rail Vikas Nigam, because of those individual the OFS from the government side, leading to this kind of a volume and price action on this one. But yeah, commodity stocks, Tata Steel, BSL, all of them came off. What did do well? Yeah, continues to do well, but mind you, intraday hit a high of 4,000 or thereabouts. From there, came off to 3,629, again showing the pressure that I was talking about. I think it's just becoming difficult for stocks, mid caps as well, to sustain the kind of momentum that they had. The fact that they didn't have too much of the momentum in the broader end of the spectrum was borne out by the fact that the Adani Group stocks, some of them were also in the red today. Nikki, what stood out at the larger end of the spectrum?
Yeah, I'd like to extend the conversation for ICRA, Niraj, because the stock has done pretty amazing in the last 8 days. We've seen a 33% uptick there, and volume seem to be on the upside, 13.7 times the 30-day average volumes. RSI seems to be a little on the higher end at 77, indicating that the stock may be overbought. But what I like about the company fundamentally is the fact that it's almost a debt-free company. It's been maintaining a healthy dividend payout of 28%. But on the flip side, I'd also like to highlight the fact that the company has delivered a poor sales growth of nearly it's a flat growth over the last 5 years. So that's something which needs to be watched out for when it comes to this one. But what also did well was RT Industries, which hit a record high level, top gainer on the Nifty, one of the top gainer on Nifty Midcap Index. The stock gained as much as 8.5% in trade and was the biggest single day gainer in nearly a year. Which was up for fourth straight day. And, talk about the volumes. It was 14 times 20-day average volumes. The RSI was on a little of a higher side. But of course, if you talk about fundamentals and the analysts tracking the counter, 18 out of 24 analysts have a buy rating on this one. So clearly some bullish stance coming in on this one. But on the flip side, and here's what didn't do well, was a RIL Vikas Nigam, where, as you just slightly highlighted, that the government plans to send around 15% stake through an OFS, which comes at a discount of 9.5% as compared to the previous market price. That was one bit of development or disappointment, which rather crept into the counter, leading to a sharp cut for this one. But Niraj, a new listing today, Anupam Rasayan, which ended the day lower by more than 6.5%. With this and the kind of caution that we're now seeing coming across for the IPO or new listed stocks, what do you think would be the fate for something like a barbecue IPO?
I mean, difficult to quite figure out whether the fate of Anupam Rasayan will be meted out to the others for sure. But yeah, you got to account for the fact that Anupam Rasayan came in at about 80 PE, and at those valuations for a company to do really well in a slightly skittish environment would be difficult. Trees don't grow to the skies, right? So we probably had this coming. Let's say I think tomorrow have Lakshmi Organic, which was very heavily subscribed, but it was not as expensive as Anupam, you have to admit. It's still expensive than some of the others. So don't quite know whether it's the same fate as Anupam. Probably would not. Probably will do better. But let's wait and watch. But yeah, it's a next few days of listings and exciting times until the 30th. So let's wait and watch what happens to some of the others. I doubt that we can kind of make an argument for the same thing to happen to the others, but let's wait and watch. What are you spotting, Nikki? And then, of course, fill us in on the world markets as well, because they might have a bearing on what we do tomorrow on expiry day.
Yeah, European market, the last time I checked, was trading with a cautious undertone. And, there is this whole third wave of COVID-19 which is playing out. Netherlands seems to be, they've announced that, there'll be a nationwide curfew. And this is an extension to the likes of Germany, France, and Italy, which have already tightened restrictive measures. Part of the problem also has got to do with the fact that there's been a relative slow rollout of vaccines. On the brighter note, Germany factory output data was decent enough. It rose to a record high in March, and the services also, did expand after 5 consecutive months of decline. Some green shoot when it's come to the economic data, but overall performance yet needs to be seen, and there is a bit of cautious undertone lingering around the globe as well. But this is all that we have for you at this point of time. Thank you so much for tuning in.